So you want to hear about this daycare? Spoiler alert, it cash flows a lot. Check this out. Let me share my screen here. You can have the pro forma and take a good look at it at your own pace. I'm just going to draw your attention to some of the most important pieces of this document. So we've got a key value summary talking about why the location is great, some pictures, what's going on with the actual management of the asset. Well, the company that's building out the daycare, their business model is that they purchase buildings, outfit them as daycares, and then sell them as ready to go businesses. They stay on as the management to help you staff up, as well as to help you fill the facility with kids. So that's a nice bonus. That's going to be part of the deal. In terms of what the expectations are, you know what? You're going to be able to buy this thing and rent it out. Now, from the ownership of the building, they actually have a rental escalation from $12,000 per month to $15,000 in year 2, and it keeps escalating from there. So the actual rent average over 10 years, because the daycare has a lease for 10 years with the building, ends up being $17,000 per month, which is what we run the pro forma against with that rent. You'll see that in a second. The condition, everything's new, comes with all the toys, all the equipment, all the gear, everything you need. So when we zoom in on the building itself looks great from a cash flow perspective. 17,000 per month is the average over that 10-year period. Starts at 12, escalates up from there. We've got all of the expenses in here. Net NOI is 151,000. And if we get a 3% interest rate at 25% down, well, hey, that's a good thing. That gets us $6,200 a month in cash flow, or $75,000 a year in cash flow. So in terms of what you're going to need cash to close, again, if you're putting 25% down, that is a $500,000 down payment. And then, you know, your closing expenses, legal and stuff like that. So budget for another $75,000 to $100,000 in closing costs, and to put a contingency fund for the building. Good to go. Now, the daycare is where things get really exciting. So here's the breakdown of the children and the cost revenue per child per month. The daycare is expected to run at 85% occupancy, so that's a 15% vacancy. We've got all of the costs, staffing, supplies. We have that building rental at $17 a month on average, 20% management fee. If you want to retain the management company, they'll stay on and do all of your facility and daycare management for you. This thing's got all the permits and all of the licenses and everything like that. So this thing makes 280,000, 288, a lot of money, 288 grand a year. Geez, that number is so big, it's a mouthful. That's why I stammered over it. So the purchase price of this daycare set up, ready to go, is $700. Contingency fund, I think you should put 100 away, because if it takes 3 to 6 months to fill it up with kids, you're going to want to have a little bit of buffer while you get this thing up and running. So your total investment is 800. So if you want to buy this whole kit and caboodle, you're going to need 800 for the daycare. Canadian Small Business Grant easily will finance half of that. So you're looking at about 400 grand for the daycare. You're looking at about 500 down payment. So you're going to need about $1 million. But that's $1 million to kick out some serious cash flow, and like 7.55 cap for a commercial building. That's pretty substantial. That's legit. So that's the high level overview of this building. Have a look. I mean, 30 grand a month in cash flow for $1 million investment. I'd pay attention to that. So give me a call. If you want to talk about this thing, I'll set up a call with the owner / vendor, and they can explain to you exactly how the purchase would work. And then we do kind of a joint purchase agreement for building plus business. We know what we're doing. We got you covered. Talk to you soon.